Have you ever just felt completely swamped by, well, all the financial news and data out there, especially when you're trying to make smart choices about your investments? You're reading, scrolling, trying to connect the dots, and you just wish someone could, I don't know, cut through all that noise, tell you what really counts. Well, if that sounds familiar, you are definitely in the right place. Welcome to the Deep Dive.
Yeah, absolutely. And today we're tackling a really interesting challenge. It actually came from one of our listeners, someone we'll call PPAT. Now, P, it's a common Thai way of showing respect, like for an older sibling or someone you look up to. Adds a nice personal feel. And their question was pretty direct. How do you find Thai stocks that are basically unbankruptable in this pretty unpredictable market we're seeing?
Right, unbankruptable, that's a tall order.
Yeah.
And this isn't just us brainstorming. We're drawing heavily on a recent YouTube discussion. It was on Bolong Securities Stock Now channel, episode 80, titled 10, essentially 10 Thai stocks that won't go bankrupt.
Exactly. So our mission today is to really unpack the wisdom from that discussion, pull out the key ideas, maybe some surprising facts too, and help you understand, what criteria make a business genuinely built to last. The kind that offers stability, maybe some decent income, even when everything else feels a bit shaky.
Okay, so this whole search for unbankruptable stocks, what's really behind that feeling among investors right now? Is it just market jitters or something deeper?
I think it's deeper. We're definitely picking up on this sense of weariness, like PPAT expressed. It's not just the ups and downs, it's exhaustion with constantly having to trade, react, People seem to be craving something solid, foundational, a real buy and hold approach that lets them sleep at night. PPAT literally asked for stocks that won't go bankrupt. It's not about quick profits. It's about finding companies you can stick with for, say, 10 years or more. The vibe is, I'm done with trading. I just want to buy something good and hold on to it.
That makes a lot of sense. Less chasing trends, more seeking a safe harbor for your money.
Precisely. Think about it this way. If you have, $1 million baht to invest, and you spread that across 10 of these kinds of solid companies, even if you get an average dividend yield of, say, 5%, it's still way better, like 5 times better, than the maybe 1% you'd get from a standard bank deposit right now. The goal is reliable income without digging into your savings, your principal. That's a big worry when interest rates are so low.
And there's this interesting contrast, isn't there, between these, ancient established businesses and the flashier tech companies. The Thai market has this unique flavor, with these jiaosua, these tycoons owning businesses that are often near monopolies. They've seen it all. You might not know what some AI company looks like in 10 years, but these guys, we have a pretty decent idea they'll still be around.
They are definitely survivors. They've weathered countless economic storms. But, we also have to acknowledge why investors might be feeling bored or hesitant right now. There are market headwinds, political uncertainty, policy shifts that seem to happen quite often. And the big one, the dominance of high-frequency trading HFT and trading robots. HFT makes up a huge chunk of daily volume now. It crowds out regular investors trying to find an edge. Plus, honestly, there aren't many strong external catalysts pulling foreign money into the Thai market at the moment.
And that leads to that feeling of being stuck on the mountain, right? People bought something, the price dropped, and now they're just holding on, feeling trapped. It really highlights why shifting to that value investor mindset is so critical. Focusing on the long-term business, its fundamentals, not just the daily price wiggles or the noise from the HFTs. Look at the business, not just the ticker symbol.
Okay, so if that's the goal, what actually defines an unbankruptable business? First, let's be clear. Not going bankrupt is very different from the stock price won't ever go down. That's not the promise here. We're focused purely on the endurance of the business model itself.
It makes me think of that Warren Buffett quote, when the tide goes out, you see who's been swimming naked. And right now, the tide feels pretty low. It's showing which businesses are genuinely solid. The source really hammered this point. Look beyond reported profits. Look for real cash flow. A company might even report a loss, but if cash is consistently coming in, that's a powerful sign of survival.
Absolutely critical. Cash is king, always. Beyond that, look for companies providing things people need. Essential products, essential services, things tied to daily life. They mentioned venomous, the 4 basic necessities in Thai culture. Food, shelter, clothing, medicine. Businesses dealing in these tend to have very stable revenues because, people can't just stop buying them, whatever the economy's doing.
And then there are the big infrastructure plays, the ones with high barriers to entry. Utilities, transport, maybe internet services. These often operate as monopolies or near monopolies, right? They have that moat Buffett talks about. It's incredibly tough for new players, especially from overseas, to come in and compete. because of the huge costs and regulations involved.
Definitely. And the final piece is strong financials. And here's something quite striking from the source material. While people often worry about banks globally, the Thai banking system, especially the big players, is actually seen as remarkably resilient. It's quite a contrast sometimes. Their capital adequacy ratios, basically, their safety cushion against risks, are often way above requirements. Think over 20%, when the minimum for key banks is 12%. And their loan loss coverage, how much they've set aside for potential bad loans, is incredibly high. Bangkok Bank, BBL, was mentioned as having like 300% coverage compared to maybe 150% for others. This deep financial conservatism acts as a sort of quiet bedrock for the whole economy.
Okay, wow. That's reassuring. So based on all those criteria, cash flow, essentials, barriers to entry, strong financials, which companies actually got highlighted in the source discussion? Let's start with GULF, Gulf Energy Development. What makes them fit the bill?
Well, GULF isn't just a power company anymore. Their vision is really tied into Thailand's national development. Power generation, yes, but also big infrastructure, telecom, data centers. What makes them seem unbankruptable isn't just diversification, it's how deeply embedded they are in the country's growth plans. It's more than just strong backing. They're almost a foundational partner. That creates a massive moat. They started with electricity, sure, but they've moved smartly into other key areas. And the INT-UCH merger was a big deal. It seriously lowered their debt relative to their equity. That gives them huge capacity to borrow more money, cheaply too, like around 3% interest, and use it to buy assets that generate high returns. Plus, they have a pipeline of contracted power projects already lined up, guaranteeing future income streams.
Okay, so GLLF powers the nation. Let's look at how we stay connected to the ICT group, focusing on AIS and True. Telecoms feels super competitive, though.
They are, but what's happened is you basically have a duopoly now with AIS and True post-mergers. That changes the dynamic. Thailand uses a lot of mobile data and internet, so volumes are high. This allows for competitive pricing, but overall pretty stable or even improving profits for these two giants. True, for example, is expected to get back to profitability maybe late this year or early next after sorting out the merger stuff. AIS, meanwhile, just keeps paying out consistent, often increasing dividends. There was that interesting football price war recently, with JIS partnering with GulfAS, offering really cheap football streaming packages, like 199 bahts. It shows competition exists, yeah, but it also shows these big players can absorb these kinds of offers into their bundles without fundamentally hurting their core mobile and internet business. They're just too entrenched.
So they compete on the fringes, but the core is solid.
Got it. All right, let's talk PTT, the big energy company. For many investors, it's almost a default holding in Thailand. PTT is definitely an anchor. It's huge, represents something like 12% of the entire Thai stock market capitalization. Historically, their dividend has been very stable, often around 2 bahts per share. Right now, the dividend yield is actually quite attractive, maybe 6-7%, similar to where it was back in 2016. They have strong cash flow, a solid balance sheet. In uncertain times, it's seen as a reliable source of dividend income, almost a must-have for that stability.
From energy flowing through the country, let's look at the gateways. AOT, airports in Thailand. This one's had some headlines, some drama around the duty-free contract. Does that risk make it less unbankruptable?
Well, that's the interesting part. Around 70% of AOT's revenue comes from really stable airport charges, landing fees, parking fees, things like that. Very predictable. The duty-free concession issue could affect how the stock is valued, yes. There are estimates it might knock 2027 baht off the perceived value if the King Power revenue deal changes significantly. But the analysis suggested that even if duty-free revenue dropped by, say, 30%, which is a big hypothetical drop, AOT still wouldn't be losing money overall. Their other operations are incredibly profitable, with high EBITDA margins, maybe 50-60%. They're very efficient. Plus, you have other huge Thai conglomerates, like Central or Chiroan, apparently ready and willing to step into the duty-free space if King Power's terms change drastically. And here's a weird thing. The stock price recently was actually lower than during the worst of COVID-19, but the current situation, even with the duty-free questions, isn't nearly as bad as a total travel shutdown.
That is odd. It seems like a potential market overreaction, maybe.
It could be. We'll have to see how those negotiations play out, but the underlying airport business seems robust.
Okay, interesting point on market sentiment versus reality. Let's switch to ground transport, BEM, Bangkok Expressway and Metro. People know the Metro, but you mentioned their expressway business is actually bigger.
That's right. The expressway revenue is larger, and crucially, those contracts are very long-term, stretching out past 2030. BEM shows stable and growing earnings per share and dividends. They have a notably conservative strategy. They They tend to pick the really solid, high-traffic projects, think the Blue Line Metro Loop in Bangkok, or key expressways where demand is almost guaranteed. For projects that feel a bit riskier, like maybe the Purple Line extension, they often act just as the operator, not taking on the full investment risk. It's quite savvy. And they've been talking about that double-deck elevated expressway project for ages, showing they're always thinking very long-term about Bangkok's infrastructure needs.
A real backbone for the city. Okay, next up, CPALL and CPX, which is macro. The source called them the Walmart of Thailand. That scale must provide resilience.
Oh, the scale is immense. Combined, you're looking at nearly $1 trillion baht in revenue between 7-Eleven's retail dominance and Macro's wholesale reach. Now, the group's overall profit might fluctuate year to year depending on the economy and competition. But the company has a strong track record of maintaining its dividend payouts, currently around 1.44 baht per share. They pay this out from their accumulated earnings, usually aiming for a payout ratio of 50-60%. Their financial footing is considered very sound. They're just fundamentally intertwined with how Thailand consumes goods day in, day out. Even with new competitors popping up, like Central's Go in wholesale, CP's sheer size and network are formidable.
Makes sense, essential retail. Now, healthcare, a global megatrend. The hospital group, specifically BDMS and BCH, were highlighted. What's the key resilience factor here?
High demand is obvious, but the real moat is the supply side. Specifically, the limited supply of skilled medical professionals. Training doctors and specialists takes a long time, and bringing them in from overseas is difficult. This creates a very high barrier to entry for new hospitals. BDMS has a smart strategy. They cater to pretty much all market segments, people paying cash, people with insurance, different income levels. This makes them less vulnerable if one segment slows down. BCH is interesting too. They have a stable base from Social Security contracts, plus a balanced and growing international patient business around 10%. This is more stable than hospitals that become overly dependent on, say, just one or two foreign markets, which can be volatile. Their secure access to doctors is a huge defensible advantage.
Okay, that supply constraint is key. Let's circle back to the bank group PBL, KTB, and Tisco. You mentioned their surprising robustness earlier.
Yes, surprisingly strong. Those high capital adequacy ratios, often over 20%, well above the 12% minimum for systemically important banks, and the massive loan loss coverage ratios like BBL at 300% versus maybe 150% elsewhere. It means they are incredibly well prepared for bumps in the road or bad debts. And even though the market's been choppy, many bank stocks are trading below their book value right now. This means their dividend yields look quite attractive, currently in the 6-8% range. That's way better than leaving cash in a deposit account.
And Tisco was singled out within the banks for stability.
Tisco really stands out, especially looking post-COVID. Their dividend has been remarkably consistent, around 7.8 baht per share. That translates to a yield right now of about 7-8%. That level of consistency makes it a really reliable income generator, almost like PTT in terms of dividend reliability. If you're looking for that predictable income stream year after year, Tisco is definitely one to look at closely.
Right, nearly there. Last one, TLI, Thai Life Insurance. Insurance feels inherently long-term.
It is. TLI is the biggest Thai-owned life insurer, number 3 overall by premiums collected. Their key strength is the persistency ratio. About 80-90% of their policyholders renew every single year. That creates an incredibly stable, predictable cash flow coming in consistently. They've also been increasing their dividends. The yield is now around 5%. And fundamentally, their business model is very low risk. The source pointed out, somewhat morbidly perhaps, that you'd need something truly catastrophic, like 15-20% of their policyholders dying simultaneously, for them to face serious trouble. It's built for stability.
Wow, okay, so let's tie this all together for you, the listener. We've gone through these 10 groups or companies. They're diverse energy, telecom, banks, healthcare, retail infrastructure, but they share these core traits, don't they? Essential services, strong finances, often barriers to entry, and that potential for consistent dividends. They look like solid candidates for a long-term, less stressed portfolio.
Exactly. And if you were to build a balanced portfolio from stocks like these, that average dividend yield of around 5% we mentioned, that's a realistic possibility. And for many people seeking reliable income, trying to avoid dipping into their savings, that 5% is a really significant advantage over just keeping money in the bank. It directly addresses that eating into principal fear.
So it sounds like a compelling list, a strong set of ideas, which brings us to the real challenge for you now, perhaps. Given all these potentially great, stable options, the main task might just be finding the capital to invest.
Well, yes, that's often the practical hurdle, but hopefully understanding these principles, seeing how to identify potentially resilient businesses, that empowers your own financial thinking.
Absolutely. Consider these insights a springboard for your own research into long-term value. And here's a final thought to leave you with. In a world obsessed with disruption and the next big thing, maybe, just maybe, true investing insight sometimes lies in recognizing the profound, enduring value in things that seem almost ancient, things that are simply essential and built